Brokers. Islamic accounts. Holding open positions for over 24 hours is accompanied with a special fee called a swap. This special fee is a type of interest and therefore creates a problem for Muslim traders following the Sharia law, which forbids certain financial transactions, mostly ones accumulating interest. To solve this, brokers offer Muslim traders a special trading account called an Islamic account. This account has all the possibilities and options of a regular account, but is not subjected to any type of interest. Broker structure. All Forex brokers fall into three categories. 1. DD, dealing desk, also referred to as an MM, market maker. 2. NDD, non-dealing desk. 3. Hybrid broker, mixture of both 1 and 2. Dealing desk broker. If your broker operates just a DD, then when you place a trade, your broker will take the other side of your trade. One of you will win and the other will lose. Also, sometimes if the broker has another customer who wants to trade in the opposite direction, they will just match up the trades. But all trades are completed in-house, no external LPs, liquidity providers. So if you place a buy order on the Euro-US dollar, your broker will sell it to you. This means you are long on the Euro-US dollar, and your broker is short on the Euro-US dollar. If the price goes up, you make money and your broker will lose money. If the price goes down, you lose money and your broker will make money. How does the DD broker make money? Here the broker can make money from all methods: spread, commission, and by trading against their customers. These DD brokers can also hedge their trades, so if you have proven yourself to be a profitable trader, they will still take on the other side of your trade, but simultaneously hedge themselves, so as not to incur a loss. In this case, they will still make money, just only on the spread. DD brokers are also commonly called market makers. These guys can manipulate the market, you see. They are making the market and can display their own made-up prices to their customers. DD brokers have their interests against us. They want us to lose, and in the end, will do what they can to make this happen. The brokers that solely offer this service are, in my opinion, pretty close to the dude with horns. Initially, these DD brokers were all available to small retail customers because the big banks did not want to and could not deal with such small transactions, so these brokers made the market for us. But as technology has improved over the years, brokers can now easily combine these smaller trades together to get them executed into the larger pools of liquidity. This reduces the risk to the brokers and gives the customers a much fairer opportunity. So a lot of these straight up DD brokers are now either adding non-dealer desk services or slowly disappearing altogether. So are DD brokers good or bad? Mostly bad, but they are generally easier and faster to get started trading with. Not that that has much to do with actually making money, but people are for the most part impatient. If you are trading smaller amounts on a longer term swing trading system, then it is not so important and a DD broker may be okay for you. Non-dealing desk broker. If your broker operates an NDD, non-dealing desk, then when you place a trade, either one of two things will happen. 1. Your trade will get placed directly into the market with their LPs, liquidity providers. This is generally referred to as an ECN, an electronic communications network broker. Or 2. Your broker will take the other side of your trade, but at the same time place your trade with their LPs. Your broker has effectively transferred your trade into the market for you. This is generally referred to as an STP, straight through processing broker. How does the NDD broker make money? The broker will either make money on the spread of every trade you place, or they will charge you a per trade commission. So the more trades you make with them, the more money they will make. NDD brokers generally want you to succeed. The more money you make, the more trades you make, the more money the broker makes. Their interests are aligned with yours. ECN broker. ECN stands for Electronic Communications Network. There is a lot of confusion around ECNs, but here's the basics of how an ECN broker works. These ECN brokers display to you the direct price feed from their LPs, no spread adjustment. When you are placing a trade with an ECN broker, you are effectively placing your trades directly onto the market with their LPs, so any limit stop orders will be seen by the other trading parties. And because you are dealing directly with the market, you should also be able to see the DOM, depth of market, all the other buyers and sell orders and at their specific prices. Also, because you are effectively dealing direct, the broker also generally does not widen the spread. They just charge a per trade commission, and this is fine because you will see that spreads are a lot tighter. But these ECN brokers normally have a much higher initial funding limits, 10,000 plus, and do not allow micro lots. In saying that, you'll see many brokers saying that they are ECN brokers. Some will even say they are true ECN brokers, but I believe many are not. They are STP brokers. STP broker. STP means straight through processing. Again, there is a lot of confusion around STPs, but here is the basics of how an STP broker works. These STP brokers get their price feed from their LPs, widen the spread a little, and then pass the new updated prices on to their customers. When you place a trade with an STP broker, they are taking your trades and then transferring them into the market with their LPs. So you're first trading with your broker directly, like the DD brokers, then they are placing the same trade directly with the market outside of their brokerage firm. Any limit or stop orders will not be seen by the other trading parties. These will just be sitting with your broker until they're actioned, and at that point they're effectively turned into a market order in the actual market. An STP broker can use straight-through processing to send your orders to the ECN, directly to their LPs, or to another DD. Yes, you can have an NDD STP broker that looks all legit, but they're just sending their trades to an external DD, and this DD is trading against you. Generally in this case, the NDD STP broker will get a percentage of the profits generated from trading against their customers that the NDD broker has generated. All brokers using MT4 are using the STP, but some send the orders STP to their DD or onto their LPs. They have to be. This is how MT4 works. You will find a lot of conflicting information on this, depending on which broker you are speaking to, partly because of all the variances in each of these broker types, which makes them not so clear-cut, and partly because the brokers themselves just don't know. Either way, for a retail customer, both ECN and STP brokers, NDD, are in general very good. They want you to succeed. They also want you to trade as frequent and as large as possible, but this is in your control. As the saying goes, you don't need to trade 10 times a day to make a living, but your broker does. Hybrid broker. And many brokers will do both. When you place a trade with them, they will either trade against you, B-book, or transfer your trade onto their LPs, A-book, based on their belief of your trading success. Unfortunately, some traders you can see straight away that they are most likely going to fail. These brokers will look at their customers' actions like their funding size, their per trade leverage, trading style, trade frequency, support tickets, stop losses, past trade history, etc. So based on this information, they will categorize each trader. Some will go into what they call their A book, and the rest will go into their B book. 1. A book, NDD. Your trade will be placed directly into the market with their LPs, liquidity providers, as either an ECN or STP as previously discussed. 2. B book, DD. Your broker will take on the other side of your trade or line up your trade with another of their customers in-house. Many brokers still operate this way for their very small clients who overall have a very low success rate, and they end up on their B book, DD, and their smaller clients that have proven themselves end up on the A book, NDD. Broker reviews. Does the broker have good reviews? And do not only look at the review rating, try and read a few of the comments also to see exactly what the problem may have been. Every broker or business will always have the odd bad review, but if there is a common theme with a particular broker, it is important to know this before you start. Some brokers are classed as online discount brokers. They provide low-cost trading fees, but do not have many employees and in return do not provide much support. This is fine, but if you are new to trading and need the support, then don't use this broker. Just comes down to doing a little research before you jump in.